If you are one of those people who has been avoiding your numbers, like your assignment today is to put on your calendar once a week for you to pull up all of your bank accounts for your business.
We so quickly avoid our numbers when we are drowning in the client work. And I know that's where a lot of my listeners are. Like, we're putting clients first and forgetting to do that for us. So where do you want to start?
Yeah, I want to start there with like the avoiding of the numbers, because I think I compare the habit building thing a lot to like starting a workout program, where if you try to like overhaul everything at once, like change your diet, work out every day for an hour, do the blah, 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 right? Like you're going to set yourself up for failure. So take baby steps. And like, if you are one of those people who has been avoiding your numbers, like your assignment today is to put on your calendar once a week for you to pull up all of your bank accounts for your business, right? Let's go in and see what the deposits are. Let's go in and see what your operating expenses are. And then I also play the credit card points game. The Amex Gold card is the one that I like to use. And so I do all of my operating expenses on that card. Then I don't have a lot of like money going out. It's highly controlled, right? So I know when I'm going to pay that card and when the cash flow works. So I log into all my accounts and I look to see like what's going on, like kind of get an idea of what's about to come in, what has gone out, and then look at, my credit card balance. And the other thing about creating this like weekly meeting with yourself is it's going to bring awareness to like, oh, I was expecting that client to pay me. Why isn't that money in my bank account? A good exercise is just add up all the deposits if you're not using separate bank accounts and see how much money actually came in that week. Did it align with what you were expecting? Does a client still owe you? Does it shed light on like, oh, actually my goal was 5K, only 3K came in, and I know everybody paid me, so I need to go out and get more clients, or I need to change pricing. It's just going to illuminate some things about your business.
And does this all apply to a service provider who might not have as many expenses? Like, I'm just thinking in terms of like a credit card still builds credit, which is good, even if it's only HoneyBook and I don't know, your website hosting.
There's a couple reasons why I love using a credit card. One of them being that you can really, like I said, control your cash flow. So you're not having automatic expenses coming out of a cash account. And for me, it creates peace of mind to have it like it's all building in this other account. And then I get to decide when I'm going to pay it. It's not at the mercy of when I signed up for that software. Right.
Yeah.
And so that, and if there's fraud, it's a lot safer to have things going on a credit card. And then you're not having to recoup cash, or like maybe you were expecting you needed that cash and something happens and now it's not in your account and you have to wait for it to be recovered. If it's in a credit card, it's a lot easier to dispute things.
So what can we be doing in the day-to-day with our bookkeeping? Because this is very intimidating for someone who hasn't had the experience that you've had.
I would say like if you're going to get serious and do like, I'm going to sit down every Friday morning, I'm going to look at my bank accounts, you may as well also log into either QuickBooks or Xero or whatever you're using, or maybe it's a spreadsheet and you're just recording everything, or export what happened in the bank, record it in a spreadsheet and kind of categorize it. And it can be very simple. You don't have to get complex with it. It could be like you create a few of your expense categories like software, if you're contracting with anyone else, like contract labor. And if you're doing any travel, you have a travel category. So don't overdo it with your categories. Just keep it simple enough to where you understand what's going into that account. And then recording all the revenue, like where that's coming from.
I think a great place to start is a spreadsheet. That's what I did when I first started, because things were kind of simple when it was just me. Like, you're at an agency level, it's different. I like that you just keep it simple for us.
That's the thing, is like, if the more complicated you make it, the less likely you're going to follow through with it. So it's like a morning routine, right? Like, don't try to have a 20-step morning routine. Like, if you're a mom right now and all you can actually get is 5 minutes, that's all your morning routine needs to be. Like 5 minutes for you to sit and scroll Instagram in the morning. Like, give yourself a break. Don't overcomplicate it. Otherwise you won't do it.
So what else do we need to be doing? I'm kind of curious about what we can expense and write off. You talked about those expense categories, and I'm just thinking of a newer freelancer who has a couple clients, like they are going to have software. They're also going to do professional development and be expensing that. And I know you and I had a conversation in Voxer about what we can write off at the end of the year. Can you elaborate on that?
If you're keeping your bank account separate, it makes it easier to track all this, but you also need to keep all the receipts and keep all the invoices and everything. That's the proof. If you were to ever get audited, like that's where you're going to defend that the business purpose, right? So one of the things that the IRS says is it has to be ordinary and necessary. So ordinary in your industry, a lot of stuff you can write off because it truly is a business expense. Like you said, personal development, memberships, dues and subscriptions, meals when you're traveling, meals if you're taking out a potential client or a current client or even someone that you consider like a colleague. The habit that I've set up for myself is when I'm traveling, when I pay the bill, I write the tip on the receipt that I'm going to leave there. And then I write also on that receipt the business purpose of that meal. So if I'm traveling, I'll say travel to whatever event it is that I'm traveling to, or traveling for visiting a client or whatever, right? Or speaking at a mastermind. And so I write all of that on the receipt and I take a photo and then I leave it there. I don't even I don't even bring it with me. That's how you want to handle meal receipts, like keeping proof of why it was a business expense. And then there's other things that are kind of a gray area, like gifts or clothing, where if you can support the business purpose for it, it can be a deduction. You just want to keep proof of why that was a business expense.
Something else I want to go ahead and awkwardly bring up now is this whole risk thing. I think this is important because some of our clients will be in this boat too.
So yeah, because the influencer industry and even this online business industry is fairly new, and part of what makes something a deductible business expense in the IRS's eyes is it has to be ordinary and necessary. So ordinary meaning ordinary for the industry. Well, when we have a brand new industry, we're creating what is ordinary at this point. So as long as you can support your stance on why you took that as a business expense, in the event you were to get audited, which is the chances are fairly slim.
Okay, so then I also wanted to ask you, I know we're kind of turning this into a tax conversation, but there's also office space.
Yeah, so there's a home office deduction. There's a standard home office deduction that you can take if you don't want to track expenses around it, and it's a $300 deduction. It's not very much. Or you can say, "All right, my office is actually like 200 square feet and my house is maybe 1,000 square feet. That's a decent portion of my entire home." Like for me, you can see I'm like in my living room.
Yeah.
Like this is the biggest part of my house. This is my office. And this isn't something that you don't have to track it throughout the year. But if you have an easy way of like logging in and pulling all your utility bills, if you pay rent or you have a mortgage, it's the whole expense, right? And you deduct it based on the percentage of the footage in your home. Now you look at all the expenses for your home: rent, utilities. I would say if you're not meeting clients at your home, I wouldn't deduct like yard work. But again,
Yeah.
it's whatever you're comfortable with.
Housekeeping, right? Like the
Yeah,
she
I
comes in
might
here and
deduct
cleans
that.
this.
Yeah. So you total all of these home expenses up, repairs on your home. Yeah, that's going to be a big chunk of a write-off to take a
Mhm.
home office deduction not using the standard deduction. So like this year, you bet your bottom dollar I'm going to be I'm going to be adding up all my home expenses and taking that as a deduction. And if you own your home, like you won't be able to deduct your entire mortgage payment because mortgages are a kind of a different beast, but the interest portion you can. So if your interest each month on your mortgage payment is $500, you take that percentage of the $500. And I mentioned home repairs, but also like I'm looking at your backdrop and I can see like colored paint, the plants you bought, the carpet, the unicorn in the background, like
Yeah.
all those things, like I would write those off.
And then there's a couple things that slid by me, and I know some of the social media assistants, content managers. I have some apps on my phone that actually went to Apple and went to like my husband's account because that's when it was set up. And I almost forgot about those. Like, oh yeah, I'm paying for Voxer, I'm paying for
Yeah.
TikTok, and TikTok save and repost, and there's a few other InShot or CapCut, and so some of those, like, don't forget about those.
Yeah,
That's
especially yeah, because I have the same thing, like, those are always linked to our personal
Mhm.
accounts, credit cards.
Yes.
So whenever I see those Apple receipts come into my email, I forward them to HubDoc, which is that system we use, and then I just write a note like paid for personally. And so if you have a bookkeeper, your bookkeeper knows how to handle that.
Yeah.
If you don't have a bookkeeper, just add it in or keep a spreadsheet of these expenses that you're paying for personally so that your accountant can add them in at the end of the year.
This is so fun. Thank you so much for sharing all these tactical bookkeeping tips. I wanted to ask you before we go, what is like the number one mistake that you see brand new, especially service providers making when it comes to their bookkeeping?
I'm going to give you 2 mistakes. We've already talked about both of them. I just want to really highlight them.
Hammer it
Number
home.
1 huh?
I said hammer it home.
Number 1 is to keep your business and personal separate. Like, that's gonna make it so much easier to, 1, prove those business expenses because you're only running business stuff through your business, and it's gonna make it a lot easier to sift through and figure out, you know, pulling out all the proof and finding all the stuff, right? So, keep your business and personal separate. My second tip, saving for taxes. So, like you said, like, it's really easy to just be like, "Oh, all this money is mine," like, when you first get paid. And maybe for the first one, that's probably okay. Like, the first time you get paid from a new client, definitely, like, keep that all for yourself because it feels really good.
Yeah.
But everyone after that, like, make sure that you don't touch that money. You take 15% of that total deposit that you're getting, and you set it aside in a savings account.
Oh my gosh, I love that. Do you also have a freebie for us, your KPI guide? Tell us about
Yes. Yeah. So if you are already like keeping your own books, or maybe you even have a bookkeeper doing stuff for you, the KPI guide is going to illuminate some 4 key financial indicators that you should be looking at every month to just kind of keep a pulse on your business. And they're pretty simple. I show you how to calculate them, but you do have to have some bookkeeping in place to be able to figure those out. And so hopefully that gets you into the habit of either find a bookkeeper or start doing your bookkeeping so you can track those.
Okay, that's awesome. And that's to go beyond that first like fancy finance Friday that you do. You
Yes.
start like using this for that next step. I know some of you are ready for it, which is why I'm so glad you had that for us.